Hey traders, a quick one here on nat gas, gold, silver, and crude oil, starting with natural gas. Right here, what do we have? I'm going to go through Owanda, then I'm going to go through capital.com and Nemex platform as well. So right here, starting with Owanda, as we are getting a condition here, that's why I'm going to use this platform first. Now here on Owanda, it's a bit different here. As you can see, the price is still in the level of support, and here on this platform, as I trade on Owanda, if I see a bullish engulfer, that will be just a scalp for me, scalp of few ATR, 1 to 2 ATR, then I exit and start to look for my bearish pullback entry. So I'll be looking for pullback entries here on this platform, not aggressive entry or not a Fibonacci entry. So once we have broken below this zone, I'm going to plot my tool and then I'm going to start to use the zone for my aggressive entry or my Fibonacci entry once we have broken below. Otherwise, I'm just looking for the normal pullback followed by bearish engulfer. I'm going to go short. If we have a bullish confirmation, that will be a signal of a little bounce, not a reversal, but the bounce will be enough to hit your buy targets. As mentioned yesterday, if we have a bullish engulfer, in that case, we're going to expect some bounce before the price will push lower again. Now, but we are getting a possible double bottom pattern. And with that, we also have a double bottom here on 1 hour time frame. So on both time frames, we are getting double bottom with the oversold situation. So what I'm expecting now, I'm expecting if this candle turns to be a bullish engulfing candle, in that case, we have a valid buy signal, and I'll keep my stop loss below, take profit 1-to-1 initially. Now, that doesn't mean the price is going to reverse. I'm just going to take my profits. Let's say if we have a candle close here, maximum I'll go 1.421, something like this. I'll keep my stop loss here below this rejection box, and I can either go 1-to-1 or 1.421, which is something like this. But my initial targets will be 1 ATR from here. But again, that doesn't mean the price is going to reverse. I'm not going to hang on with my trades. It can still push up and hit 50 EMA, forms a bearish engulfer, and come back down in this area of value. So we are still in the support, minor support, from where the price have dramatically pushed up right from here, and we are now in the same level. Price is forming a bullish engulfer, which I've been talking about in last couple of videos as well. And right here we're getting a pattern. If we have a close, we have a valid buy signal, and price will likely bounce up at least 1 ATR, and then you can manage it till 1.221 or 1.421. That's totally up to you. Stop loss will be below this pattern. Simply wait for the price to close, and we're going to go for a quick scalp. Now here on capital.com, as mentioned yesterday, that we also are looking at a Fibonacci retracement entry, and we are below the zone, but the momentum below the zone was not good. So as you can see, I want to see a good momentum below the zone before I use the zone as my trend continuation bullish area. But now aggressive entry, like I mentioned, will be risky, which is something like this, and 50% can be your sell limit order, because if you get a bounce here on Owanda, it will definitely going to push up from here. In that case, the stop loss is here, take profit here. So that is why I will not go for aggressive entry, but it's totally up to you how you want to enter. So I'll still look for Owanda entry because I trade on Owanda. If the price pushes up, if it's closed as a bullish engulfer, it is not a bullish engulfer anyway. As you can see, that candle opens above, but looking at the overbought situation, I'm expecting some correction from here, a push up, hit of 50 EMA, and then bearish engulfer, and then price will likely come down. So for a good sell confirmation, I want to see now a complete break and close below these low, a good momentum, then a pullback, and then a bearish engulfer. And let's see how it plays out. I'm looking at this level. If the price break below this low, in that case, we're looking at this level for the possible buy trade. Now, let me confirm, we have no sell condition yet on this platform. We have no entry triggered for sell. So that is why be patient. Look for the possible bounce, which I'm expecting at this point. Here on Nemex, exactly the same. We are below the price. We can expect some pullbacks and then bearish engulfer, and the price will push lower from here. But if you get an entry on Owanda, expect a good push up from here. And for the complete bullish confirmation, I want to see a price to break above 50 EMA. Only then we have a confirmed condition that price is now going to change its trend. So expect a bounce, looking at the double bottom pattern on Owanda. After the bounce, that is enough to hit your targets. I'll exit and I'll look for next condition, either a bearish engulfer here, or either I'll look for the break above this 50 EMA. Next up, we have silver. Silver is pushed up nicely. Now, I've already mentioned that the silver is going to be pushing up and it's bullish. And after the break above this pattern, we have a likely chance the price is going to push up. Now, we are above this pattern. We are completely bullish for this one. Now, that doesn't mean you start buying from here, and that is just a FOMO if you start buying from here. All I want to see a pullback of few candles, that is very important, followed by bullish engulfer. If you have a retest of the recent zone, which is right here, 29.72, if you have a retest and price forms a bullish engulfer, that will be a very strong entry condition. Now, I'm going to use my Fibonacci retracement as well from here if you want to look for aggressive entry, as we are now broken above, and that will be my buy limit order at 50% retracement. Aggressive entries are risky, but risk to reward ratio is right here. 1.618 retracement will be my target. Stop loss can be below the EMAs right here or below this Fibonacci retracement. So that's what I'll be looking at. 50% for aggressive entry, pullback of few candles followed by bullish engulfer. That will be a confirmation of an buy entry and less aggressive way to enter. Now that is also a minor head and shoulder pattern right here. That is why we have a good chance that gold will shoot up from here, and my bias is still above for gold. Within this area we do have a minor head and shoulder bullish pattern that is also shows a bullish pressure, and we can still get a very likely chance that price will shoot up from here, but the bias is still bullish as long as we are above 50 and 20 EMA, as long as we are not broken below this low. Now here on gold, I've already been mentioning from couple of videos that we are getting a possible bullish pattern right here, a head and shoulder pattern, and that was happened in the minor zone. That is why I've not entered this trade, but if you are an aggressive trader, if you have entered it, that played out nicely. So head and shoulder pattern has been played out nicely. Price broke above this trend line. All we are looking at a pullback of few candles followed by bullish engulfer and keep on taking longs from here. Now the next zone till where I'm expecting a price to hit, which is 2375.6, that goes to 2387, a zone till where I'm expecting a price to hit, and then price will likely give us a good pullback and then continuation towards the upside. So still bullish, only looking for the pullbacks with bullish engulfer and keep on taking longs. Next up we have crude oil. Now in case you're wondering, and just to give you a heads up, that is not a valid bullish engulfing pattern, and I'm not taking it as a valid entry according to my rules of pullback entry. If you are my student in MMTA course, you know what rule is not met here. So right here I'm still looking for a valid bullish engulfer. Let's say if this candle closes a bearish candle, a red candle, and the next candle turns to be a bullish candle, and that is also an engulfing candle. If we have that, we have a valid buy signal, and then I'll expect the price to push up and at least hit this recent high. But my initial targets will be 180R. So next candle, bullish engulfer will be the entry, and I'll go long using 180R and manage it till this recent high. Let's say we have no entry, and if the price still falls above 50 EMA and price forms a bullish engulfer at 50 EMA or above 50 EMA, in that case I will still go for my long trades. So that's it for commodities, guys. Hope you're getting value. If yes, hit a like button for me, subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next one. Till then, take care.